for After Hours with your hosts, Tom Hartman and Mike Christensen.
Welcome, everyone, to After Hours with TradersPost on this fantastic October 25th, 2024. My name is Tom Hartman, and I'm joined, as ever, with Mike Christensen. How's it going, Mike?
Good, Tom. How are you today?
Pretty good week. Well, I mean, I did get liquidated on one Bitcoin position that I was leveraged long in, but that happens. I mean, what are you going to do?
Is what it is.
That's been pretty good. Yeah, exactly.
Nice.
And, you know, trading VWAP strategies is my new bread and butter, so I'm really enjoying that. As far as the week is concerned of news, what we've had over the last week, it's been pretty interesting. If we take a look at the headlines that we're going to have for this week in Wall Street, first up, we're going to be talking about Tesla shares jumping 22% after an amazing earnings report that beat expectations. After that, we're going to be touching on Kalshi, right? So Kalshi is a bet-in market, very much a la Polymarket that we talked about last week, where they're making inroads. Some interesting changes with regulation there that opens up bet-in markets for the U.S. elections to U.S. residents. And then finally, the Dow, basically the S&P climbs to new highs. We're up, can you believe it, 40% on the year. I mean, a little bit down today, but 40% on the year. That's like, you know, some crypto level types of gains on there. So I want to be able to touch on that because this has been our expectation that's been set by other people within the markets, and so all kinds of things to talk about there. So let's go ahead with Tesla here. The it's pretty incredible to have I mean, as far as I'm concerned, Tesla is the new Widowmaker trade. I don't know if you ever heard of the yen carry trade that's commonly referred to as the Widowmaker trade, where because of the yen carry trade, people who would start inside of the markets, they would analyze it and they would see on the surface of it, oh, it doesn't make any sense, this trade, it should unwind. And obviously when you first start in the markets, you think that, hey, since this is the first time I'm seeing it, it's probably going to unwind like soon, and so you place this big bet on it, and then you blow out. But Tesla is now starting to be this thing. Like, can you imagine shorting Tesla into this earnings and then you get your face blown off with a 20% rise?
For sure. Especially the gap up on that one. The day that the earnings came out, I think the gap was already 11% and then closed up 20% by the end of the day. And then it's just added another 4% today. So I would not want to be short on that one. No question.
Have you ever shorted Tesla before?
No. Point in fact, I've only ever gone long short on futures. I've actually never shorted any stocks to date.
Oh, really? Okay. I guess knowing you a little bit, it seems like your mentality is like stock markets go up, why short, right?
Yeah, long, always long. And when I'm sometimes short, I want to be short kind of the whole market because it's really hard to tell which one to be short on, and exactly for these types of reasons. Earnings reports will come out and you just get completely wiped out. And I think early on when I was researching the realm of short sellers that were out there, they were just a different breed of individuals. I find like the Hindenburg research guys pretty interesting, but I don't have the kind of clout and following in order to promote a short sell on my side. So markets tend to go up.
Right. So you think that the part of it is part of it is the that the short seller is helped by the publicity of it, and then that's what helps the short sell get into play.
I mean, it's certainly not surprising that Bill Ackman is usually very loud about his short positions, or at least he was in the past before he decided he wasn't going to short positions anymore because of the battle he had with Carl Icahn on Herbalife. In general, I think there are some short sellers out there that truly have some good information and they can hold that position long enough to truly become profitable. But maybe another way to look at it is the most you're ever going to make on a short position, assuming you take it all the way to zero, is 100%. But I can hold a position in a long for several years and make well above 100% if I'm in the right company.
Right. But what you gain, the pleasure that you gain from shorting something that everyone loves or is long and make money on that feels pretty like the first time I shorted Tesla, I did make money. And then it's sort of like, well, I know better than the people who are along this thing because look, I just made this cash. So there's something to be said about that feeling. I don't know if I could put a price on it.
Well,
The
maybe be fair, but it reminds me of the adage: "Would you rather be right or make money?" I think I tend to lean towards just the making money part.
That's right. Well, I have to be married for a little while before I came to that conclusion. Now I just want to make money. I wanted to play this this clip from the All In podcast from earlier this week, talking about Elon Musk and Tesla and SpaceX and the whole thing because I thought it was very interesting. I mean, these guys, I don't know if you watch the All In podcast, but they're like fanboys for VC and for these and for capitalism, which it's great to have that perspective so blatantly described on a podcast. But the way that they talked about, especially Chamath, about Tesla specifically, I thought it was pretty interesting. I'll just play that for a second here.
All right, our boy Elon had a big week. Tesla unveiled 2 new concepts at its We Robot event, and Elon caught a 23-story rocket, the Starship. Here's the Robo-Taxi and the Robo-Bus. Both of them look really awesome. And he caught one of the I think this is the 5th Starship or the 4th launch?
5th. Oh,
the 5th,
God,
right?
So
and then
incredible.
Look at this.
It's so incredible.
It's like chopsticks catching
Forget
a
about whatever
23-story
your
building.
issues are with Elon and his politics, just to appreciate, and we can talk about why this is so important in the segment. But technically, the achievement of this like skyscraper falling out of the sky and perfectly aligning itself to go into that chopstick catching device, it is an absolute marvel of human ingenuity. I mean, and the work and the effort that people put into this over several decades. It's just such an incredible feat. Look at this thing. It's incredible.
Chamath, any thoughts on the Robo Van or the Cyber Cab, the Model 2, I guess some people are calling it, but it's, the Cyber Cab specifically not calling it number 2 and doesn't have a steering wheel or pedals. I would have bought 2 of those immediately if it had a steering wheel and pedals. I want to drive it. Yeah. It looks like the hybrid of like a Model Y and the Cybertruck. So I kind of really love the aesthetics of it.
So beautiful.
Yeah, you like it?
My reaction was actually, I don't know, just seeing these releases now over 10 or 15 years, plus of knowing him, nothing. It's I guess it's like not that surprising. Maybe it's weird to say, like I just expect him and his teams to figure it out. Like they're just all.
See, that's the part I find to be so heartwarming, and the look in their eyes and what they're saying here, because when you're shorting any asset like this, a single stock, you have to like not believe in the underlying force that's driving it, and Elon Musk is the underlying force driving Twitter, SpaceX, and Tesla. And to me, the idea that anyone would short something like this, like, what are you betting against? Like you were just saying before, the max you could make is 100% down if you're expecting it's going to crash. And it's sort of like, why would I want to? It's like holding a stock in defense contractors. It's sort of like, yay, my stock went up, a war just started. Like, it's like, well, what do you want to own? Like, what position are you really trying to express? And I find it unbelievable that someone could see a company make an EV vehicle and change the entire landscape, that they can have a rocket fall from or as I think they described it on All In, a skyscraper fall from the sky and then caught by chopsticks, and then go, I'm going to bet against that guy. Like, to me, it just seems absolutely insane. And so if this and then with Twitter no longer being listed, then the proxy play for that, the whole Grok AI stuff now is in the Tesla stock. Like if you want to express your bullishness for AI in the same way that Nvidia would be your expression for that. And so
That's right.
There's so many bullish currents for Tesla. I'd be far more to see it double in a year. I'd be far more credulous for that than to see it drop by 50% and stay there.
I think there's a couple of observations here. One, I want to make this call out to the fact that the 3 things that were released in that Tesla event look strikingly similar to the iRobot movie. I have no idea how they're not going to get sued for that, but the robots looked like iRobot. The robo van looks like the USR vans that would drive around with the robots that were carrying that were carrying the robots inside them. And then of course the robo taxi looks exactly like the same car that was fully automated that Will Smith drove. And like, if you see them side by side, I don't know if I can, I found this TikTok clip and I paused it here. Let me see if I can share my screen, because like side by side, it's just ridiculous. It does look identical once you see them all together.
So there's a tweet about that going around, and then I think maybe the director of it or something like that was saying this, hey, where's my check?
Right.
And then there are follow-ups on this where people go, where they compare the iRobot to the one that from a previous movie. They're like, no, you stole it all from this other movie, from the 50s or whatever. And they're like, no, you don't get any credit for this.
Fair. Okay. So way to call it the fact that basically there's nothing original. We're all copying at some point, right? But I guess the other observation is that this is a really good example of what I would call story stocks, right? Like where the narrative of a company tends to be more important than some of the fundamentals. And it's a really tough one with Tesla, because when we look at their value as a company and we look at their PE ratio, from a fundamental perspective, they are significantly overvalued, not just by like book value or even price to earnings, but even just on forward earnings. So this is a really good example of those instances where, like early on, especially in investing, you'll learn the efficient market hypothesis. And basically that's this belief that all market participants are fully rational and we've all been provided the opportunity to the same information. So in theory, the price should reflect all forward information. But I think there are times like this, for example, where you've got these mispricings that take place and they are consistent mispricings. And that is one of those things where I think you perfectly explained it a moment ago. People like to bet on Tesla as a proxy for his accomplishments, for Elon's accomplishments, regardless of whether that has to do with SpaceX's performance, Twitter's performance, or his political beliefs. You're basically investing in Tesla as a vote for Elon when you do that, which is why I've heard people jokingly refer to buying stock in Tesla as $Elon, right? Because it's not Tesla you're investing in, it's Elon you're investing in. It gets me thinking in general, like especially around the idea of betting markets. Why don't we have some kind of a proxy for investing in individuals? If we had a betting market for whether or not a person would succeed by some measure, maybe that would be a new betting market or pool that we could create here. If you really want to take a bet on Elon, let's see if there's a way to stand up a contract around that, right?
So that was my hope for crypto, right? I don't if you were part of the whole phase there with did you ever hear of Rally.io back in the previous bubble? So it was this crypto project. So. Yeah, this crypto project where essentially it's this framework where individuals like content creators and influencers would sign up to Rally.io, and if they met certain types of metrics of popularity, they can get a crypto coin associated with them or a token associated with them, but they didn't have to like build the whole blockchain for it. This was housed on the Rally network, and that was essentially a way for you to buy into a content creator without having to do it on PayPal or OnlyFans or something like that, where you're not buying any equity in the content creator. Whereas on Rally.io, the idea is that, hey, you could be a fan of this person for the next 3 years, and then if you decide, oh, I'm no longer into this or what have you, you can sell those tokens to the marketplace of people who want to join in. And so instead of buying the T-shirt, you're buying the tokens that give you access to different types of content and perks and blah blah blah. But those tokens could go up in value when the influencer, the content creator, went up in value as well. I loved that idea, and my portfolio was doing very well until the day that project died. But I hope that it comes back in the next cycle as the technology now is better, like floating around on the blockchains. I expect to see it on Cardano, and sure. I want to see things like this, and I want to see it even on like non-popular individuals, right? Where you can do it for, I'd love to do it for my kids, do it for family members. And the idea is that you're raising money in your community by buying into the children or other entrepreneurs in your community, and you're getting a stake on that. And those ideas are there. The technology is starting to be developed, and I think in the golden age, which I think is coming, we get that merger. And but for now, Doge coin, that's my way of buying Elon stock.
Buying Elon, which is, it gets me thinking, why hasn't somebody thought to create their own cryptocurrency to represent their clout? Like, in theory, what you're saying makes sense. If I'm an early successful entrepreneur and I've gained a following of a fair bit, plenty of people following me on social media, and they're investing in my success in the future, we can use cryptocurrencies in order to invest in their success in some way, right? And then they could in theory use that capital to continue to invest in their own success. But then others who join in on the bandwagon are effectively expressing their vote for this person's future success. I'm surprised nobody has created a brand name cryptocurrency that represents them in itself. Like, why isn't there an Elon coin out there, and why hasn't Elon capitalized on this? This seems like something he would have done.
Sure. The interesting thing, I always love how it comes back to this privacy issue, where for cryptocurrency, because they were doing stuff like that or they attempted it, where let's say some sports ball players, you can buy their token, and the idea is that, that there would be some sort of dividend paid from the contract out to the holders, but then everyone knows you own that player. And everyone could see, and then everyone could track your transactions. And it's sort of like, until we actually have privacy on the crypto network, we're never going to have that. Shout out to Midnight on Cardano, which is trying to solve this problem. But until that happens, like people are not going to want other people to know that, hey, I bought this product from you on, maybe I bought a piece of content or a T-shirt from you on this thing completely separate, but now you can see that I also support these types of people, and that's gonna be a problem, but we'll see. But for right now, the for Tesla, like calls on Tesla, I mean, they're so expensive, but calls on Tesla is sort of like, how do you miss long dated calls? Seems like a good trade. Speaking of different types of markets that we can jump into, Kalshi. I don't know if you've been seeing this, but they've started advertising basically everywhere. I don't know if it's just because I started noticing them or because they started advertising, but 3 weeks ago, there's a regulatory change that allowed them to have U.S. elections in their betting markets. Actually, let me play the video real quick, and we'll talk about it on the backside here.
Got it.
Prediction market startup Kalshi resuming some of the betting on its platform related to elections. This follows a decision by federal appeals court on Wednesday. The court's ruling effectively lifted what was a freeze on congressional control contracts, which were prohibited by the CFTC. Joining us right now in an exclusive interview to discuss it all, Kalshi CEO Tarek Mansour. Good morning to you.
It was now the first time in 100 years that election markets were legal in the United States again. Today at 8:15, we are going to see the first legal trade on the U.S. election in 100 years in the United States.
Of course, one of the big things that people worry about when they hear about gambling or betting on the election is the manipulation, effectively, of this market to try to manipulate the impression that the public could very well have about the outcome of an election. What do you think about that?
So I'll start with the sort of headline answer. These concerns are totally moot. They are baseless and ill-founded. And there's three reasons for it. These markets have existed. They've existed in a number of other democracies, UK, Ireland, Australia. They have existed actually in the US. I think, Joe, you've mentioned these markets multiple times on the show, and the reason is because they're accurate. They work. They work better than polls. The polling accuracy has been decreasing over the last 10 years. So first is they have existed, and if anything, they haven't threatened elections. They've actually promoted. Now that you have a source of truth that you can quote. And three, let's actually get into the specifics.
Why do you say they promote election integrity?
Because they're a mechanism for truth.
Meaning what? Meaning that people look at that as opposed to polls, and that's helpful?
Well, they look at that in conjunction to polls and in conjunction to a lot of other things, right? Like in the 2016 elections, you had a number of polls that were saying Hillary Clinton had a 90% chance of winning, which was a ludicrous statement in retrospect. These markets were not going to be at 90%. They might have been at 55%, but not 90. And so these markets, people have skin in the game, so they don't lie. Whereas in polls, they can say whatever. And two, markets work. I mean, if you believe in markets, you have to believe that these work. They aggregate the wisdom of the crowds, and you get an accurate gauge and so on. I do want to respond to your specific, you outlined a very specific example, and I kind of really like that example. It's like, well, what if a group of people, aggregates, it's like, let's manipulate the odds of these markets. Sure. Let's assume they decide to spend, tens of millions of dollars, hundreds of millions of dollars to move the prices. Fine. They can do that. But what will happen is the price moves from 50 to 60. Arbitrageurs and traders on Wall Street will see that the prices have moved, bring it back down.
How much money would it cost to move it? You say hundreds of millions of dollars. If somebody bet, I don't know, 100,000, would it move it? How liquid are these markets? How much would it take? How much?
There'll be a few million dollars of liquidity at the top of the book. I mean, you have to spend millions to move it. But the thing is, like any other market, if the fair value is 50 and you try to move it to 60, traders will bring it back to 50 immediately.
One of the things we have seen, though, over the past couple of years, and it happened in the context of short interest on GameStop, for example, or an AMC, where you've seen, call it the wisdom of crowds. I don't know if it's the wisdom of anything, but it's a group of people, maybe who aren't calling each other on the telephone and doing this secretly, but are doing it on Reddit or on Twitter or you name the social media platform, and they're deciding we're going all in this way. And they have moved the market not just for a day or two or three, but for months on end, sometimes in what you may describe as a rational way, what other people would say is completely irrational.
Yeah.
What would happen if that were to take place, and would that be perverting democracy?
That's a great question. There's something kind of interesting about these markets. They're not as manipulable as stocks. It might be a bold statement, but there is a correct answer here. What is the price of GameStop? Can anyone here tell me? I don't really know.
I could give you a quote.
What is the probability of Trump winning this election? Somewhere between 45 and 55. It's probably not 90. And so there's an existence of what we call a fair value, a correct answer to this price. So these markets are not actually very manipulable.
So, Mike, I am just so fascinated by these betting markets and how they're becoming more and more popular, because just imagine, just a thought experiment of imagine it's the stock market doesn't exist, or it's back when the stock market was first starting, and we had this sort of media, and there was sports betting, right? Sports betting has been around for forever, and the discussion is, hey, how can we actually have these stocks trading on a market? Well, couldn't they be manipulated and change public opinion about what people think about investing in, and couldn't that be dangerous? And what kind of regulatory changes? You can imagine having that conversation around the start of the stock market. And now the idea of not using this as a tool, as a barometer for the health of an economy, as a way of generating liquidity, as a way of expressing positions, ideas about the future. Like, we see that as like, oh, of course, this is a useful tool, especially in a capitalist society. Well, the betting markets, we're starting to get this thing now, right? So to the point where on CNBC, I mean, we're getting that Venn diagram meeting where the betting market is meeting the people talking about the stock market. So literally, you can bet on Taylor Swift on one product talked about on CNBC now, and then you can bet on a stock for Cathie Woods for ARK Invest ETF. I find this just to be this eclipse happening to be absolutely mesmerizing. Do you have any opinion on that?
I do. I have a few opinions on this. One is that I don't think that this is an accurate reflection of the probabilities of the outcome of the election. And I'm going to stand on that despite the claims made by the gentleman that was speaking there. I'm not actually sure who they were speaking to. Who were they interviewing?
He's the CEO of Kalshi.
Of Kalshi. Okay, that's what I thought. So obviously he's got a bit of an incentive to promote this idea that they represent accurate views of the market because he wants more participants on the platform. So I'll go ahead and outright say, like, his incentive is to get more people participating there and expressing their vote. And from that perspective, I would love to see more participants in these markets, but we have to be honest, these are both young. They have specific types of participants. And I guarantee if we polled the United States, 90% of US citizens have not ever used any kind of betting pool to vote on an election before, right? So if that's the case, then we've got this isolated sort of cohort of individuals in the United States that we're using as a sample to represent the rest of the country. And I don't think it's a representative sample. I think that there's definitely some inherent bias there. There's definitely some individuals that are more likely to vote for one candidate or the other that would actually show up on platforms like these. And it definitely doesn't represent the overall voter pool across the United States in all states and all counties. I think it's too small of a sample size. In addition to that, I don't agree with his viewpoint that these markets can't be easily manipulated. I think we discussed that last week, that it's even been discovered there's some pretty large pools that are working together to manipulate the percentages on Polymarket.
That's right.
But here's my thought behind this. When we first started talking about this, we talked about it like it's a futures contract. If it's like a futures contract, then I have the ability to get into this position, vote for one candidate or the other, it doesn't matter. And I can sell that position again if I've increased my position in profit. So that means the turnover on these trades is some degree higher than the amount of participants that are out there, right? Let's assume for a moment that people are actually trading in these contracts. That's going to create a signal of momentum within the two candidates that are on that list, or the two outcomes that are listed. If people are under the impression that if they vote for Trump and they likely will see an increase in value in the future, then what stops them from buying today, selling tomorrow in profit, buying again, selling again in profit? That increases the amount of volume that's there. But ultimately, the bigger point I'm trying to make here is that their incentive to vote one way or another likely has to do with the trend of what's showing up on the chart, right? If everybody is jumping in on the momentum of the winning candidate, whoever that is that necessarily representative of our sentiment about who the candidate should be? Or is it because there's an incentive for you to get in on the winning candidate?
This is what I love about the betting markets, because what we definitely have, so what you just outlined are potential forces at play, motivations and forces at play. But what we definitely have is money on the line on a chart, right? So for whatever reason the people are putting money into it, whether they think this is a way for me to actually vote with my money, or they are trading public opinion or pollsters or whatever it is, at different motivations, which is the argument for the stock market, right? That over time, what is it? Voting machine versus weighing machine. That short term is voting machine, long term weighting machine. Now, because these are betting markets that are short term, it's sort of like all voting machine, no waiting, right? So like that's basically the what I'm getting from what you're saying, that we're never actually going to get to the what the CEO was saying, the truth of it, right? If it's being manipulated, because there's no reason for it to resolve in that way. The people who are trying to bet in certain direction in order to influence public opinion, they're not looking for a profit at the end. Their profit is the change in public opinion. They're not looking to close this position out at a gain. They're fine with that being a loss. The people who are trading the pollster information, or discrepancies with the pollster information, or doing arbitrage between one platform or another, they also don't care about the final outcome, because they're in and out while it's happening. Fine, but that's for right now. Right? If we're seeing the trend of the popularity of these systems, what we're seeing is that they're going to become more and more popular and more accessible. So one of the issues with Polymarket is that they weren't allowed to U.S. residents, right? And so you're like, oh, okay, this is supposed to be representative of let's say the presidential election, supposed to be representative, yeah, but no U.S. people are allowed to participate unless you use a VPN in order to do it. So what are you even talking about? Whereas Kalshi is allowed for U.S. residents. So I'm wondering now if that might be a dynamic, and then if we have the numbers show up in Kalshi in one way for the split, and then different in Polymarket, well, then people might be like, well, I'm going to trust the Kalshi more because it's more U.S. residents. Let me short the Polymarket one, and then you have this sort of dynamic. And so I'm just interested in seeing how all that might actually play out. And then let's say the election occurs, we get a bet, and let's say it is in favor of who was winning on the betting markets. Well, that makes it more likely that people will bet in that will side with what it's saying in the next election season. And if it's not, well, then people will be like, I couldn't trust it. It'll change the dynamics, and we'll have a different thing. So I think over time we'll settle on something more, even in the short term, more actually accurate. But the thing to keep in mind here is that we're obviously it's coming to the forefront because of the election. There are markets on Kalshi that, I mean, no one's going in there to manipulate the those markets. Like, I just want to share my screen here for a second because I just find this absolutely
well, I would argue against that. I think that there's an interesting inefficiency in these markets, and as I look at especially the change in trend on Polymarket for Trump versus Harris, if we can pull that one up as well, there was an interesting arbitrage opportunity that was there at the early stages of that contract. Right there. If there's a big enough spread between, like, this to me looks like a spread trade or a pairs trade rather, where the divergence between the two outcomes is so wide that you'll want to go long Harris and short Trump here until it gets closer to an efficient outcome, right? Or at least a more realistic outcome. And I think that it danced around right in the middle there because of arbitrageurs. And as time has gone on, they're starting to create this divergence between the two again, sure, because of the popularity of Trump being on the rise here, which again, I think plays into momentum. But eventually that spread will be so wide that arbitrageurs will step back in again, which again, as I'm trying to explain some of the behaviors of the market participants here, I think this represents more of an example of inefficient markets and arbitrage opportunity rather than a reflection of pure vote. To your point, though, as the population of users grows, that will start to diminish unless the size of the arbitrageurs is larger than the notional size of all of the people participating. If people are just throwing around $5 bets, for example, and arbitrageurs have hundreds of millions of dollars to work with, then they can actually sway the market.
Right. Well, over here we have right now Kalshi is saying that the amount traded, the volume in this market is 76 million. And I believe there's a cap of 25,000 that you can actually place on the trade. So it's sort of one of those things that, hey, maybe the difficulty in which someone who wanted to deploy $50 million in order to move the market consistently over time for periods of months might be too much to make it worthwhile. I mean, that's a sizable amount of money. So I'm more inclined I'm more inclined to believe that it is possible that these numbers are more accurate, or more that the bias, it's no matter how spread out the numbers are, it's the bias you want to go to. But the thing I'm really fascinated by is, well, these two things. One, the markets that are not likely to be manipulated. So, for example, weather patterns.
Do you really think that Kalshi would prevent hedge funds from operating as arbitrageurs in these markets to create more liquidity, though?
Well, I believe that was part of the issues that they were having with that made it so that they couldn't do the election betting anymore. So they lost the ability to do it. Then they had to deal with the CFTC. Then they had to sue the CFTC and come back. And so they're under scrutiny in order to make sure that this plays out well. I don't think it's one of those things like in Polymarket where you can even see in the crypto market, like in the crypto wallets, hey, these guys are manipulating. These 4 wallets are dumping millions of dollars inside of it. This is not the same case. So look, I'm not an expert on Kalshi, but I'm more inclined to believe that it might be accurate. But the thing,
accurate how? What do you mean by accurate?
That I'm less inclined to believe that millions of dollars are moving these markets. I'm just less inclined to believe it, especially like if you take a look at the polls and the how they actually go about it, their methodology for doing these polls. You dive into some of them, and so many of them are total BS. Total BS. They're purchased in order to give a certain bias towards one thing because it's favorable to whatever, some pack or whatever that's following them on any side. And so I don't believe the polls at all. So given the fact that I don't believe the polls and I don't outright believe these markets, I still favor these markets for the bias than I would do on the polls.
Yeah. So what are your thoughts? I mean, to sort of circle back to this main thesis here, you're saying they're accurate to the actual voting preferences of American citizens that are voting for president, or how do you reconcile the fact that it can be treated like a like a trend following strategy, right? Like these individuals are basically placing their bet on the trend that's moving in their favor. And since they can really either buy yes or buy no on either side, they can chase that trend in either direction. If the divergence gets large enough, we already see that there's reversion to the mean. You can see that over that long-term chart initially with Trump and Harris on Polymarket. Wouldn't you expect the same thing to occur on Kalshi here over time? Or do you really think that the voting preference is changing in this linear fashion for Trump?
So as someone who's like an Americana weeb, and following everything that goes on inside the politics of the United States, the first thing I do after I see a big news report or some sort of interview or what have you of the candidates, I go here to see what the number on all these markets to see where the numbers change. And I am seeing that there is a change that's happening that is representative of the net narrative that I'm seeing. So obviously something happens and, the Democrats say that this was good or bad, and then the Republicans say this is good or bad, and they're always opposite of whatever they're paying attention to. But if someone says that this is a good thing happens, and I'm sitting there going, well, no, this was a bad thing that happens. I'm seeing that the numbers reflect more my opinion, my net opinion on the narrative that's happening. And so, and then when you're outside of the partisans inside of the, let's say the election, and you're looking at independent media, they also seem to be in line with what's going on the charts. Now, my opinion of this will completely change if the election occurs and it's like a landslide for Kamala. Then I would be like, okay, well, fine. Then this, I won't follow it. But this is the first time I'm seeing this type of trades.
What if the outcome of the election though is that the popular vote is very, very close? Like we're talking 49-51 here, and yet even right before the election, the Kalshi market is still 65, 35. What does that tell us about the accuracy of these markets? Does that really show us that these are trend following strategies rather than an accurate reflection of voter preferences?
That's a great point. Carson mentioned something like this, where he goes, where the idea here is that what the markets are measuring are not just the bias, but the magnitude of the outcome. And so the idea is that, let's say Trump were to win, that it would likely mean that the Republican Congress would stay Republican, and they would get the Senate, and there would be a clean sweep, and there would be this massive mandate for the Republicans. Whereas if Kamala won, then let's say it would be a marginal victory. She wouldn't have the House, and then the number of changes that she could implement would be lower. So that the magnitude of the change, if Trump wins, is higher than the magnitude of the change if Kamala is higher. And so what happens is that the idea is that the spread between them is measuring the impetus for people to bet. You have to, I'm trying to find the words to describe it, but it has to be weighted by the magnitude of the actual outcome. So I think that's what we're seeing, that the spread is so much higher than the polls.
So you're saying we're not just seeing a vote for Donald Trump, we're seeing also the impact we believe he'll have on the economy, on the future of America, so on and so forth.
And if you're inclined to then bet yay for him on the platform, well, that bids up the price.
Yeah.
And so it's sort of reflecting that idea.
I'm adding to that argument by saying what also bids up the price, though, is the greater fool theory, the belief that if I buy at this price, it's going to be worth more in the future.
But does it change your opinion that it will be resolved, like there will be a final price, and whatever it is, it resolves to 0 or 1 at the end of it? Because I would accept what you're saying if it was this ongoing process. But the people who are going in and out for their quick trade, well, they're doing it when before and after a major poll is going to come out, just like an earnings report, and then they're gone. Like they're just trading it, they're gone, and they're not moving the markets that much. And so it's only the people who are there to manipulate the spread long term that I could even say is the people to be concerned about.
How do you manipulate the spread long term? By trading over and over and over again?
Over and over and over again in order to get to bid up the price. So
yeah, so the Well, there's not much of an arbitrage opportunity within a single day because the variance isn't large enough to really profit from, in theory. I haven't traded these markets, but it seems to me like you would need to place very small bets over a long, protracted period of time in order to truly benefit from them. This spread that's currently taking place has taken more than 3 weeks to start to present itself. At the beginning of October, at least on Polymarket, it was closer to 49.49. Not sure where the difference in math here goes. Like, where does this less than 1% vote go? How can it not be exactly 100% as the sum? I'm not quite sure. Anyway, the spread has increased over the last month. We're now at this point where it's 65-35. In order for me to start making a bet in the opposite direction, I'm basically wanting to measure the distance between the two and look for the extreme. So I would probably start. Let me clarify this. If I say buy no on Trump, is that shorting Trump? Do I benefit if his vote comes down? Okay. So then I start building a series of no contracts for Trump, which is my way to short Trump on the way back down to this divergence. On the same side, I can also buy yes on Kamala. That's my theoretical hedging strategy here, if you will, right?
That's right.
You can buy both at the same time. I can say buy no Trump and yes Kamala in order to wait for those
and
two.
I think you could even sell yeses and sell nos. Like, you don't even have to buy the opposite direction, or maybe they just show themselves in the same way.
I'm even more convinced that this is just pairs trading. You're not really voting for a candidate, one candidate or the other. You're playing a divergence strategy. You're waiting for big extremes in divergence, and you're going short one and long the other.
Right. So then, how do you explain over here in the Polymarket chart, right around the whole is Biden going to get kicked out sort of thing? We had this big spread, and then it's sort of like the volatility around that event did show up in the price, where there was this uncertainty that was being expressed here after the debate between Biden and Trump. So, like, it is somewhat representative of what's actually going on.
Certainly. Like, think about it again from a trend following perspective. I think the same thing happens in stock markets and even in futures markets, right? If there's any surprising enough of an event or something that's significant enough in order to get people interested in that, in the futures contract, NASDAQ 100 or ES, or, maybe something happens with Tesla. If anybody is under the impression that if they place a bet right now and it's going to be worth more at the end of the day, then that creates that activity, right? So if there's something that happens in the news that operates as a catalyst, that's the beginning of a momentum play.
So do you think the same sort of thing makes it so that, do you think betting on sports is completely devoid from whether or not people actually think this person will win or not?
100%, because most people are basically placing a bet on their favorites for the most part. But I think there's probably more noise in sports betting than something like this. This is kind of like singular outcome, right? Or like a line bet in sports. And more often than not, people tend to vote for their favorite team. What statistical information can you really rely on in order to decide which team is going to win and which one's not? You've got, their game history, like how many games, what's their current record, who are their players, things like that. But there's so many unknown events that are there as well. It's the same thing here. We don't have all the information. There's still a lot of unknowns, like representative data about how people are actually going to vote. There's still 3 or 4 million undecided voters in America as well. So, and those people could literally tip the vote in one direction or the other. What I can definitely say without a doubt is that it's not this big of a spread. I really think, as with most elections in the United States, they tend to be very close. They are never this far apart.
That's right. Okay. And so what do you think about the markets that are not the election markets, where there is no real incentive to shift the price? Do you think those would be more representative, or are they just the same dynamic you're talking about?
No, I think it's the same arbitrage opportunity. Anytime there's illiquidity and an inefficiency in terms of market participants, as long as there's enough volume in that market, people are going to play against the other side. They're looking for exactly the type of trade setup that I was describing.
But they have to do it in the direction of the trend, because
we already said you can be long and short at the same time. So you can create a pairs opportunity.
But we wouldn't expect to see the numbers reversed on Trump and Harris at this point. Or let's go with the Fed interest rate, right? If you take a look at the Fed interest rate on the Polymarket on Kalshi, you'll get a number for probability that's like, not exactly the same as on the Fed probability tool, but in the same ballpark. You wouldn't expect to see it completely opposite on the opposite direction, because it has to be somewhat in direction of the actual trend for the expectation for it to be supported.
I think this goes back to what kind of trade you're trying to express here. If you're trying to play the momentum play, the trend following play, then you'll have to pick one side or the other. And you're really going after the one that keeps going up or the one that keeps going down. In the case of trying to do a pairs trade, you can play both sides, but you want enough of an extreme in order to play both sides.
Fair enough. Okay, well, it should be interesting. Well, there is one more thing I wanted to talk about for the Kalshi one, which it's bittersweet for me because Kalshi is a US only platform. I can't get access to their API. However, the Polymarket doesn't have an API. Kalshi does have an API. Let me share my screen here for a second.
So we're going to go back to the question of whether this gets integrated as another asset class on TradersPost. Excuse me.
Absolutely. So I wanted both as an asset class on TradersPost because they have a nice API here for it, and the use of this as an indicator to be able to use it as part of.
I would love to know what the internal data on this is. How many algorithmic traders are in this market that are doing arbitrage plays right now? You know what I mean? The fact that they make their API so accessible and they're describing it as algorithmic approach to betting on Kalshi just tells me right away that there's a lot of arbitrageurs that are taking advantage of these inefficiencies.
I just can't accept that it's so much that it becomes not useful as a sentiment indicator at the very least. That's the part I can't get to. It can't be that much, because then why would anyone bet in the market?
I think because you're under the impression that you're getting to profit from your opinion, right? Again, I think this is what supports the momentum part of this. If I believe in voting for Trump, and I think I'm going to get paid for the idea of voting for Trump, then I make my bet here. That's what incentivizes people getting involved. It's momentum.
That's a vote in my favor. That means that it's the gray hat thing you're talking about, the black hat thing you're talking about, depends on an undercurrent of an actual belief system that you're voting for what you actually
just
think. Like
the stock market, both of these things are taking place at the same time. Arbitrageurs exist in the stock market, as well as long-term individual investors, as well as short-term traders. All of the market participants operate together, and since we don't quite know exactly where price is going to go, what people's incentives are based on is what we know about price today and where it recently was, right? So if we know the trend is currently heading in this direction, all that does is create a feedback loop for more and more people to jump in on the Trump vote, to go long Trump and short Kamala. Eventually, that's going to reach an extreme that makes no sense, and so people start going the other direction.
Okay, last thing I'll say on it. Let's say instead, you're not looking at any one given market, but you're looking at so there have been a series of, let's say, Trump-Harris bets that you could take over the last few months. And then there's that, and then there's different kinds of markets, right? For the battleground states and for quirky things like will JD Vance wear a blue suit at the debate versus a gray suit at the debate, like all these different things.
Are they really making them that small, like little tiny things like that?
I'm telling you, man. I'm telling. It's all kinds of different things that happen in these markets, not just a country, but like predicted and all that. All these crazy things. How many times will a certain word happen inside of an event or whatever? All these different things. Okay. And so, if you were to take all that into consideration, you were to develop something, a strategy that took all that as a sentiment analysis into consideration, would you say, well, that might be representative of a trend you can actually make a decision on? Or is the guy behind the curtain?
I'm still like, I guess I'm going to have to die on this hill. I'm very convinced that these markets are very inefficient and they're largely run by arbitrageurs, and that ultimately people's betting preferences are based on momentum. I'm going to stand by that thesis. And the way to prove that thesis is to watch for the extremes. Watch when it gets too far spread and watch it bounce back and revert to mean. Show me an indication of it running so far spread out over a period of time, all the way to the very end. And I'd be interested in analyzing that a little differently. But I think we've got some comments here that are really cracking me up here on the side. But we've got sort of, we have to consider that the incentives of market participants vary from betting pool to betting pool, right? If the pool is small enough, it's probably less of an incentive for mommy, daddy, stop fighting. It's less of an incentive for arbitrageurs to get involved because there's not enough liquidity there. But if the pool is large enough and the divergence is large enough, I'm more than certain there's somebody playing on that inefficiency.
Okay, so you don't believe the stock market tells the truth either?
It's different. It's different, right? Like there's other rational information that's behind the scenes that supports the market price. There's always this difference between market price and the actual value of a company. We can take the value to represent a proxy for where that price should go over the long run. And oftentimes, and many times, the value of a company can be completely divorced from the actual market price. In this case, though, we don't have that inside information. We don't have earnings reports to go on. We don't have any, public information about how many people are voting for Kamala versus Trump. So there's no reliable inside information that should tell us whether or not this is an accurate reflection of reality. What I can say is that, my sense of markets tells me that people play on momentum and people play on reversion. And those two things exist in any type of trading market, especially if it's constructed this way, where you can go long and short on either side and you can bet in either direction. They've been given the instruments in order to make those types of bets. So it would be different if this were like we had a verifiable way to cast a poll for 100 million randomly selected Americans, and they all verified their identity, and we asked them, who are you going to vote for? And then we ended up with the results of that, right? Like taking a small sample of 12,000 people across the United States, I totally understand why people lack faith in polling systems, because usually the samples are so small. But eventually, if you get a lot of opinions together, it's really hard to argue with the stats at that point. The only time we have this decisive information about how voters actually think is on election day.
That's right. I just want to say
next week.
What you describe it is just, Tom, just have an election. And then
just have an election and then we'll know.
Fine. I'm going to go on Glassdoor. I'm going to find a disgruntled worker at Polymarket and at Kalshi. We're going to get them on the show and ask them what's actually happened behind the doors. Because I think you're
I'd
wrong.
love it.
Let's see.
I would love to go toe to toe with the CEO of Kalshi there. I really think that he's got a lot of good reasons to ignore the impact that arbitrageurs have on their markets.
Excellent. Perfect. We should still do TradersPost bets, and it's a standalone product that integrates directly with the markets and make lots of money. All right. Last story. We've been talking. I mean, I'm a fanboy for Ken Carson. I mean, I'll just say that flat out.
Super smart guy.
I'll be a fanboy for anybody who's been like super right and like calling the shots, 8-ball corner pocket. I mean, this guy's really been doing it. So I just want to play a quick video from him over here. And then we'll come back on the backside here. Second.
Mr. Jem Carson comes back to a senior managing partner at Kai Volatility Advisors. You were talking to us about melt up into the end of the year last time we spoke.
2 weeks away from the election. We've been talking about this for a while. And just as importantly, inching towards that end of the year piece we've been talking about. So both those things playing together to a very powerful kind of dynamic.
Is that when the market lets go of that election tension?
Exactly. So the wall of warrior, all these adages you hear actually have fundamental underpinnings. And those are actually supply and demand on insurance. When people are afraid that there's risk in the market, people go buy puts, right? Mm-hmm. And that pushes up the price of those puts, the delta of those puts, the premium paid. And that increases the amount of move that we need in order for those things to be in the money.
Yep.
And if they don't go in the money. At the end of the day, dealers or the street or whoever's warehousing that risk has to buy it back. We've talked about this enough. Those entities are short December puts, and they have been for years because December starts with leaps. And as it rolls forward, it's also where all the structured product issuance, which is at record highs, comes in. All of the positioning is back there at the end of the quarter.
Mechanical calendar stuff.
Mechanical calendar stuff. But importantly, it's that increase in the skew and the hedging is only supplemented by the election when the election happens, right? So all of that put positioning has created a very, very high skew. A record high skew in the back of the curve. That skew at some point has to come out of the market. Either in one of two ways. Either we need to move down through it so it no longer is skew, which is increasingly unlikely, or it needs to be taken out and the deltas that are hedging it some way or another have to get bought back and the trade needs to be locked in. That is the way markets work. This is supply demand.
How far out does that skew go past November?
So you see it all the way out into January.
Wow.
But the
so
peak,
it's inauguration basically skew almost?
The peak is December 20th.
Okay.
But everything around it is, it's a big lump.
Okay.
Right? And December 20th, because that's when the electors actually place the vote.
That goes back to your mechanical point.
Exactly.
Kind of pushes it forward from the inauguration a little bit.
Although I would argue that the December 20th, the reason for that peak is less because that's the date and more because that's December OPEX. And that positioning has been in the market. It's already short. It's a function of supply and demand. And everybody's short. They just, people aren't willing to digest it and take it off the table because there is some risk there. And they're already all short. What we saw actually, what happened is in August when we got that big push down, the skew and the vol in the front of the curve, people owned against this short in the back. And part of the reason that we returned so quickly from people were hedged. Oh,
wonderful.
Yeah. So as we rallied back, though, what happened? Well, the skew in the front came down, but still, what everybody was short and they got hurt on, still has remained high and only gone higher.
So then there has to be, I guess, or does there have to be anything else in one's analysis right now of whether or not there's going to be a contested election?
Of course. I mean, you can't ignore the election. The election matters, to be clear, more than for what happens in November and December. What happens in January,
Correct.
February.
There you go. You told us that before as well, and that's where I'm really siding on that, where it doesn't really matter so much either side, maybe. I mean, you could get into that debate, right, but, is it really worth the time?
What it will matter for in the short term after the election is the rotation.
Okay.
And it will matter in terms of maybe size and scale. And speed of move.
Okay.
But I think, if you're betting long, short in the market, the event passes. There's very supportive flows. Your downside with any size move is going to take, it's going to take a colossal move, something to happen.
All right, so that's the idea there. So Cam has been talking about this idea of this melt up in the stock market for almost the entire year now. And he was right last year. There was going to be a melt up because the stock market was up, I believe something like 15-20%. And so there's this mechanism where there are people who their portfolios have a larger value. And so there's all these people and institutions that then have to reinvest at extra collateral at the beginning of next year. That gets front run by people who know that process is going to happen in the new year. So it happens in November, December, which is called the Santa Claus rally. The average increase in a period of inflation in election years is 20%. I did not anticipate 40% for the S&P, right? We're at 40% right now. And he's making the case that we're not even going to... Sorry?
Is that year to date, by the way?
1 year, sorry, 12 months.
Oh, 12 months,
year to date,
okay.
It's... Year to date on the SPY is...
So 37% for 1 year as of today, 22%, 23% year to date. But still, yes, very surprising upside this year.
And the idea is that he suggested we're not even done that upside because this Santa Claus rally that he's talking about hasn't even started. So who knows what happens? I think we're up 129% on the SPY, is it, over the last 2 years, something like that? I mean, we did have a big low in 2022, but yeah. So the trade here, I mean, it's the calls for Q1, Q2 are not expensive compared to what they should be with the type of moves that we're going to have, and single stock names that have momentum and hype behind it, such as the Nvidia stock, Tesla, these are likely to move even more significantly, just crazy GameStop ways up until we get to the nervous period of mid-January to March, where another window of collapse happens. And so this is, I mean, I'm just going to call this segment Carson was right, the Carson corner, because we're seeing that actually occur. I'm struck by the way that he was talking there is exactly the way you were talking in the Kalshi debate, the fierce debate we were just having, where it's about the mechanics of the participants within the market looking for their edge to play. It has nothing to do with should the market be up. That has no bearing on anything. It's these are the flows, and this is the way that the major participants are going to be able to capitalize on it, and they could care less whether or not it was the real price for the actual asset. So, like, I could totally so that his explanation must be right up your alley for how you think everything should work.
Until we reach extremes, right? Anytime we reach extremes, that's where everybody steps in to head for the reversal, right? Same thing happens in options markets,
right? So I just wanted to mention this because we've been saying this, I think, week after week. I mean, SPY up, assets up. I mean, index assets are up, right? I think the Dow was even down. Index assets are up. Anything that has these passive flows automatically to them, any assets that are automatically bought by 401ks, that are automatically bought by pension funds, by sovereign entities. There's no
even
real
gold is back up again.
Well, the central banks are buying gold like crazy, which I know, like, seeing gold up from central banks means problem with the financial system, but you never know when that's going to happen because they think in terms of like 5-10 years. So I don't know. But the dollar bounced. How hard did that dollar bounce off the lows? Man, I lost my shirt betting on the reversal of that dollar. It was
a big reversal too. I mean, a huge move. If you're in Forex futures on the US dollar, you did quite well over the last 25 days or so.
So painful. I'm long the euro and it's just freaking diving. Fine, whatever. But the idea, that's what I'm say, do your own research, but freaking markets up unless there's a catalyst. I think he goes on to say in that video, if you want to check it on the YouTube, if China invades Taiwan on the day of the election, okay, fine, the volatility, the puts will get monetized, and then we're going to have a serious problem. But
that's right.
That's always the truth. Don't look up. Movie taught us anything is that when the asteroid comes, okay, things are going to change. But until then, you just keep your head down and keep moving. I want to finish off here with our prediction corner, where we take a look at a couple of stocks. But I don't think we talked about Tesla, which is my favorite stock to look at. But I want to take a look at Bitcoin, because Bitcoin did bounce off of.
We hit that resistance line.
Exactly. It basically, you were telling me, I think 2 weeks ago, that you were looking for that sort of bounce for it to confirm the trend.
That was exactly the resistance line I was expecting. I wanted to close above that in order for that to confirm a trend upward. Since we've rejected off of that, I'm expecting one more pullback here. However, we need to see another higher low in order to see a continuation in this trend. So this could be a short-term pullback.
Okay, so the pullback, you would expect it to go until where? Because here is the trend. Oh,
about 50% of the move, so probably down to about 64, maybe 63. But certainly not a lower low, right? It would end up posting and printing higher than the most recent low printed there.
I understand. Okay, that makes sense. All right. My prop firm account didn't survive this drop that we had today. this one candle. I was too optimistic. I was like, oh, we confirmed the bounce. Let's just move forward. But you know what I've learned? My big short come in. I can't. I don't know how to read wicks. Like the wick, when you look on the historical, you go, oh, I could tell that this is where it bounced, right?
Well, first off, your wicks are too dull. You need to make them brighter.
You make them brighter? How do you do that? Oh, you mean in the interface?
Yeah, I'm just kidding.
So I see a wick like this in the past, and I go, oh, I could tell that that's where the price would bounce. But I never really remember that while that candle's open, the candle is filled all the way to the bottom. And so I think it's headed down, and then I don't buy. right, at that location. And then I look back and I go, oh, Tom, you're so stupid, because I never really think that, oh, we're painting the wick while we're in the candle. But that's,
I see what you mean. And this is largely why I'm a big fan of waiting for confirmation, because the print tells you everything after the fact. If we try to trade mid candle, there's a lot more that could be coming. I prefer to wait for that close.
So for you, like, these are good lows to buy?
No, I would probably. So for this one, if you want,
wait.
Yeah. If you want, I can show you like sort of the short term fib extension, or excuse me, fib retrace I would look for here.
Sure.
Let me share my screen real quick. My approach here, especially when we're pulling back like this, is to wait for a big enough pullback in this short term trend. So from here to here, that would be the high, the low and the high. A 50% move on Fibonacci would be at that 64 line, like I was mentioning. A 618 retrace would be at the 62.7, somewhere around this point here. So somewhere in this zone is where I'm trying to pay attention, right? Where this is where we tend to pull back. But I'm not really interested in getting in for that longer term upward move until we've confirmed a bounce off of this level by closing above the EMA that will start to show up at that point. And I use that short-term EMA as my guide for whether or not we've confirmed right back up to the upside. At that point, that becomes the higher low that has now been confirmed here. But the market needs to retrace here. Find some full extension or full retrace here, and then confirm above the EMA before it's time to head back up again.
Interesting. Okay, so are there any other stocks that are on your radar that you're paying attention to, or even cryptos that you look at, or you're still focused on the NASDAQ futures?
I mean, all of it. I am interested in, like right now we have all the automated strategies running for prop firm accounts in NASDAQ futures, all M and Q right now. And then I have several stocks that I'm paying attention to that I'll go public with on Twitter pretty quickly. Between now and November 15th are all the 13F filings from the larger institutions. And I'm always interested in what happens around that period of time. The 13F filings are fascinating to me because, one, it represents a lot of where the larger institutional smart money is going. And if you can start to calculate what they got in for in the previous quarter and confirm the price is lower than what they paid, then it feels like a little bit of a cool opportunity here, right? To get in at a lower price than even the big guys did. So that's kind of a play that I always tend to look at. I always try to do DCF valuation or dividend analysis on each one to try to get a sense of whether or not it's currently under or overvalued. So I filter down the list to my preferences as an investor, but then I'm looking for swing trades there. The ones that have been interesting, though, are companies that are pretty well drawn down. We're talking like 50, 60% drawdowns. In those cases, as long as they're undervalued and there's still a lot of, and they're still a high quality company, then it's just a great buying opportunity. And getting the signal from the larger investors is a nice plus. I think the one that I noticed today, and this is still a little too early to make any bets because I want to see more data come through. But the reports start coming in, middle of October. You get some information pretty early. The big one that I saw a fairly large big bet played on was Nucor Corp. And when I looked this one up, if I can share my screen here again. Is this one open?
Yeah.
Okay. So Nucor is already drawn down about 30% from peak, and from an intrinsic value perspective, they're valued at about $440. So they're well undervalued, and they were purchased by two different insiders, David Katz at Matrix Asset Advisors and the Hillman Value Fund. The Hillman Value Fund bought about 40,000 shares. David bought 2,700 shares. And the Hillman Value Fund now owns, I think in total, about 6 million shares overall. So a little bit of an interesting vote here in that realm. But I'm also interested in that volume breakout, right? There's a really big volume bar here that represents obviously a big sell-off from this earnings miss. But I really think it also represents a good support area, as this, could be the print of that higher low that I'm usually looking for in a trend following strategy. So this is just one of many examples where I'll run through a whole list of what the larger investors are going after, see if it's been pulled back quite a bit, make sure it's an undervalued company, and then start to place my bets from there.
Excellent. Perfect. Well, compared to that, I'm just really paying attention to Doge, because it's Elon play, meme coin play, and I mean, it's up 67% over the last since September 2024.
I should probably start paying attention to some of those coins again. I tend to get pretty sidetracked on these other markets and stop paying attention to the smaller ones. Bitcoin and Ethereum are always on my radar, but yeah, every time I hear
Ethereum, you're still thinking about Ethereum? Ethereum is last year's thing.
Only because there's a regulated futures market for it. It's the only other crypto in which you can get on the, like TradeStation or Tradeovate. If there were a futures market for Dogecoin, I'd be interested.
Oh, that's right. I don't really see you jump into like DEXs and to try to make these crypto plays.
I'd prefer to have my cash in a regulated broker.
All right, John will be much more likely to have a Dogecoin. I'll ask him about it. All right, perfect. So that's great for this week. We'll be back next week for after hours. We'll see you guys on Tuesday for office hours, and a fun Thursday where we go through actually developing algos and strategies and different types of tactics and techniques for sending webhooks to TradersPost. As you can see, we are nerds about the markets. We have a fun mix of personalities, but at the end of the day, we want to make sure that we make money in the most risk-free way possible for Mike, and for me, the most risky way possible. So
I'm never going to get risk-free. I wish I could get risk-free, but I have risks I expect and accept.
Well, I'm glad I can't put up my kids as collateral, because that'd be trouble. All right, perfect. So it's been a pleasure, and I'll see you next week.